Hey, and welcome back. If you're thinking about buying a home, especially for the first time, you've probably heard that you need to put down 20% of the purchase price. And let's be honest, that number can sound overwhelming. For many people, it feels impossible. But here's the truth. That's not actually how it works for most buyers. The idea that you must save up 20% before you can even start looking for a home is one of the biggest myths in real estate today. In this video, I'm going to walk you through what you really need to know about down payments. By the end of this, you'll have a clearer picture of your options and maybe even realize you're a lot closer to buying than you thought. Section 1. The 20% down payment myth. Let's break down the misconception. That 20% figure might come from a good place. People trying to give advice based on what worked in the past. But today, it's simply not the standard anymore. In fact, according to recent data, the average down payment for first-time homebuyers is just 9%. That's less than half of the commonly believed 20%. The 20% recommendation came from a time when lending options were more limited. Today, there are more flexible programs that allow people to buy with much less money upfront. That 20% is no longer the norm. It's a preference that might make sense for some buyers, but it's certainly not a requirement. If you've been holding off on your dream of homeownership because you thought you needed to save tens of thousands of dollars, it's time to rethink your strategy. Section 2. Realistic down payment options. So how much do you really need? That depends on the type of mortgage loan you choose and what you qualify for. Some people choose to put down more money because it makes their offer more attractive or helps lower their monthly payment. But many others are using loan programs that allow them to buy with much less. For example, some loans require as little as 3.5% down. Others allow 0% down for eligible buyers. These programs were created to make home ownership accessible to people who don't have a large amount of savings but are otherwise financially responsible. They've helped thousands of people get into homes sooner, rather than waiting years to save a bigger down payment. Section 3. How less money down affects your loan. You might be wondering, what happens if I put down less than 20%? Well, in many cases, you'll be required to pay something called private mortgage insurance, or PMI. It's a monthly fee that protects the lender in case the borrower defaults on the loan. That extra cost might sound frustrating, but it's important to realize that PMI is not permanent. Once you've built enough equity in your home, usually around 20%, you can ask your lender to remove the PMI. And during that time, you're still gaining equity, building your credit, and benefiting from home ownership. Putting down less than 20% doesn't mean you're making a bad decision. It just means you're choosing a path that gets you in the door faster. And for many people, that makes a lot more sense than waiting.
Section 4. The power of down payment assistance. Now, this next part is where it gets exciting. There are programs available to help you with your down payment. Yes, actual financial assistance. These aren't just for low-income families. In fact, many middle-income earners and first-time buyers qualify. Research shows that around 80% of first-time buyers are eligible for down payment assistance, but only 13% take advantage of it. That's a huge gap, and it means a lot of people are missing out on free or low-cost help that could get them into a home faster. These programs can provide grants, forgivable loans, or deferred payment options that ease the upfront burden. On average, the value of these programs is around $17,000. That's not a small number. That's the kind of help that can cover your down payment, closing costs, or both. Section 5. Why people miss out. So why aren't more people using down payment assistance? A lot of it comes down to awareness. Many people simply don't know these programs exist. Others assume they don't qualify without ever checking. And some buyers are nervous about the application process, thinking it'll make things more complicated. But the truth is, when you're working with a knowledgeable real estate agent and lender, they'll guide you through it step by step. These programs are designed to be used. You just need someone to help you tap into them. If you're serious about becoming a homeowner, not knowing about down payment assistance could delay your timeline by years. But with the right guidance, you could fast-track your journey in a way that's affordable and sustainable. Section 6. Wrapping it all up. Here's the bottom line. You don't need 20% down to buy a home. That belief has kept too many people from pursuing something that's totally within reach. Most buyers today are putting down far less. There are loans that work with 3 or 5% down. There are assistance programs that offer thousands of dollars to help with upfront costs. And there are experts, like me, who can help guide you through the process from start to finish. If you've been waiting because of the down payment, now is the time to reevaluate your plan. You might be closer than you think. And if you want to learn more about your loan options or down payment assistance programs, connect with me directly. I'd love to help you explore your possibilities, answer your questions, and take those next steps toward owning your own home. Thanks for watching, and I'll see you in the next video.